Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Thursday, February 28th, 2013. Well, a continuation of the trend to the upside today, and a candle that's made a higher high and a higher low. Change of character in the market for this candle, however. Previously we had the buyers in control of the market with these prior two candles and establishment of a strong first time frame uptrend, and very large white body candles, and for the previous day's trading double the size at least of the previous day's trading for that white body. That denotes that the buyers made a substantial amount of net bullish progress on the day between the open and the close, suggested that they had very, very strong momentum. Today here we've seen that the buyers have lost all of that momentum, and we have a small black body candle that now suggests that the momentum has shifted to a small degree to the sellers. But the important thing here is that the buyers have actually lost that momentum. The other important character here of this candle is the largest shadow on the top of the body of the candle, and that represents the market interacting with the strong resistance area at 1523. We can see here three candlesticks ago we had strong rejection from that area, and in this series of candles here a few weeks ago we saw strong rejection from there. So very strong resistance at 1523 and extending just up to this major swing high around the 1530 area, so very, very strong resistance in a zone overhead. We've also seen the sellers close with control for today's session by closing down towards the lows, and that does suggest that there is strong potential for a change of trend to the downside. So combined with that, we do really need to watch the low of the current candle for a potential lower high and lower low. Now just looking at the Fibonacci extension, and now that we are in a first time frame uptrend, we're examining the relationship of this first time frame uptrend to the previous time the market was trending up. And for the previous day's trading, we saw the market trade above the 100% level in a strongly bullish manner. Today we've seen the buyers lose control. There was a target up around the 161.8% level. It doesn't seem likely that that target will be met with the weakness now in the market. There is a possibility that it can happen. So if the market does continue trending up, that is an area that we should be watching. That coincides almost exactly with this major swing high and will strengthen the resistance around that area. But in terms of the Fibonacci retracement, and this is more significant than the previous technique, and here we see the market testing exactly to the 100% level and being strongly rejected from there, and that is the best evidence, combined with the lack of commitment from the buyers, the loss of commitment that we saw with the shadow, the loss of control by them, and the sellers attempting to take control. That combined with the Fibonacci rejection is the strongest evidence that we have for a potential lower high and lower potential first time frame downtrend in this market. Now in terms of Ichimoku, we have a bullish market in all three time frames at the moment. The market's trading up above the cloud, so bullish in the long term time frame, also bullish in the medium and fast term time frames by trading above both the Kijun-sen and the Tenkan-sen. One thing to watch out for is that there is a possibility of the Tenkan-sen down below the Kijun-sen, and that would be a weak sell signal in Ichimoku charts, and it would be weak because it at the moment may occur above the cloud, and the reason that that's weak is that there is a possibility in the market interacting with the cloud and that holding as resistance. If we look over to the Chikou span here, that is maintaining itself above the corresponding price action, so it reinforces the strength that we're seeing in the market with the bias towards the buyers in all three time frames. So regardless of the all of the Ichimoku indicators, the very, very strong resistance that we have overhead in the zone extending from 1523 up to 1530, And because we are bullish in all three timeframes, if we do see this market trading in a very strongly bullish manner up above these levels, and especially up above the 1530 area, if we see a strong bullish close up above there, and we see buyers coming back into this market, there's a real possibility that we could see the market trading up to 1555 quickly. Now, I'm not saying that that is likely to happen, because the concern here is this current candle and the weakness in this current candle, and it's probably more likely that we will see the market test at lower levels and perhaps find support down around this area where we have the confluence of the Kijun Sen and the Tenkan Sen around the 1507 level, and then very, very strong support at the round number 1500, which now extends in a zone down to around the 1484 level. So there is a stronger likelihood that the market will come off, but we could see the market trading within a zone for some time, bounded by strong resistance overhead and very strong support down below.